Weakness in commodities continuing into the month end with everything from oil and natural gas to wheat and copper, all negative in June. Fundstrat's head of technical strategy, Mark Newton, joins us now with the key levels to watch in the commodity complex overall. Mark, it wasn't that long ago, maybe in the last few years, that people still referred to copper as Dr. Copper, the PhD in economics. Does the slowdown in this kind of trade for commodities give you some pause about the inflationary picture overall, not just here, but in the world?
Hey, Dom. Well, I think we've definitely seen that in recent weeks. You look at the underperformers in the month of June. It's been materials, it's been energy. A lot of that, recession fears are creeping up as people have concerns about growth and really demand and how these rate hikes are going to affect things. So you've seen a lot of commodities, iron ore, steel, zinc, a lot of things have been down 8 to 10%. And as you mentioned, copper, huge pullback to multi-month lows. A lot of times that means it's still a little bit early to consider moving in and buying dips. And so, these inflation fears have now given worry to, are we going to see a slowdown? And is that going to affect demand?
So if that's the case, if this is signaling some broader issues that are developing in the macroeconomic story, that narrative, is there an end in sight for this commodity drawdown, or are we reflecting kind of this idea that we are going to be heading into a deeper economic slowdown, globally speaking?
Yeah, my feeling is it is short-term in nature. We've seen crude oil pull back pretty substantially in the last few weeks. It's down 12 to 15%. And, we could have a temporary bottom there. The broader commodity space likely is going to sell off into the month of July. I do think there'll be more sustainable signs of intermediate term support. Many of the commodity gauges are still within uptrends, and so this is merely just short-term weakness. I do think there'll be buying opportunities for these, but that's also have to be a concern for the Fed, knowing the commodities are still very much trending up, and then we might start to turn higher in the third quarter after this little pullback has run its course.
So Mark, if you don't mind me interrupting, what we're showing viewers right now and listeners on SiriusXM, what we're seeing is a chart longer term over the course of the last 2 years of the S&P GSCI equal weighted commodity sector index. And what it's showing is that it's approaching this level on a gold line where there could be support. So take us through the levels, not just there, but for crude oil and some of the other base metal prices that you're looking at as well.
Well, it's still a little bit early, so that pullback has not reached that line yet. And anything this past week, we just saw a breakdown to new, really multi-month lows, to the lowest level we've seen in almost, the last few months. So I do think that continues in the short run. I think to end the quarter, we probably do see a pickup in the dollar and or yields into end of month, and so that could cause further weakness. I think crude oil, near term 101 is a very key level. It can rally probably to 112. Maybe 110, and then we're likely going to see some further weakness into July. So that drawdown in energy could be comforting for the Fed and inflation, as we near this second 75 basis point rate hike. But for the commodity, we really just want to keep an eye on that equal weighted gauge for commodities. And if that starts to break down more severely, then I think we could see more material weakness in the commodity space. For now, it's been the grains, it's been really base metals, and now more recently energy. I think precious metals are going to be next, unfortunately. With real rates pushing up, that's going to put some real strong overhead supply on gold and silver, I think, heading into July. And we could see a little bit further drawdown in these.
Mark, as you look at the charts, you look at the patterns developing right now, is there one or two specific trades within that commodity complex, hard or soft commodity, that seems to be the more compelling opportunity for traders going forward here?
I really don't like being long a lot of commodities in the short run. I would mention if you're a very short-term trader, I do think you can be long energy and be long crude here for a bounce. And as I mentioned, we could get to maybe 110 to 112. I think most people would be right to stay away. If you're comfortable being short, I think shorting silver and gold makes a lot of sense. I think we'll probably revisit last summer's lows. So those are really two trades, one long, one short, that I like here.
All right, Mark Newton at Fundstrat, thank you very much. Have a nice weekend, sir.